Hey everyone, this is Mr. Bishop, and I just wanted to cut right to it and say thank you so much for coming to check out this video. I just want to say that this is a wonderful tool really for anyone to use, whether you're a child or teenager, adult. It's called the Investment Growth Retirement Calculator. And it's really, really important to use this because the number one thing I've been talking to my students about in class during financial literacy is the power of time. So the earlier you start investing, the more money that you can make over time. So I'm going to plug in some numbers for this calculator, show you how it works, but I just want you to know moving forward that I'm talking about investing, which is essentially, putting your money into the stock market. And what I'm talking about investing in are index funds, which is essentially all the different companies of the stock market put together. That's what you're investing in, the whole thing. So when the stock market goes up, you're making money. If the stock market goes down, you might be losing some money, but generally, historically over time, the stock market has, it's gone like this, but it's trended upwards. Okay, so let's jump into the age first of all. Okay, so let's put in 18. Okay, let's say you're fresh out of high school. Maybe you're about to go into college, maybe not. You're starting investment. So that's how much money you have saved up. Probably something, you have this money in a savings account of some sort. Savings accounts are great, but they're very low risk, low reward, so you're not going to make a ton of money through them. So let's say you have $500 saved up. Now, monthly investment, that's how much money you're investing over this period of time up until what we're going to put in later, which is 65. That's the average retirement age. So, what you're able to put in at age 18 might be different from what you're able to put in at age 45, for example. But you want kind of like an average of what you think you would be able to put in over the years. So let's put in 300, okay? Now, rate of return, there's a lot of different options for this. What rate of return means is how much money you're getting back percentage-wise from what you're investing in, because that's the whole idea, right? Is you're investing your money and then you're getting money back. So 7% is a nice conservative starting point, okay? 10% is actually, over the last 50 years, that's about the historical rate of return in the stock market, which is great. But 7% is a bit more conservative. You don't want to go too high, because you don't want to have false expectations and then have your expectations not match up with reality. So let's stick to 7%. Now, retirement age, we're going to put in at 65 because that's the average retirement age, at least for the United States. Now, cost of living, the annual cost of living, we're going to put in $48,000 for that. So that essentially means, how much does it cost for you to live throughout the year for rent or mortgage, groceries, electricity, insurance, all that type of stuff. And you'll have a cost of living, of course, even after you retire, right? So you have to plan for that as well. So before I hit calculate, this is the chart where all the information is going to show up at. And down here we have age. Over here we have the investment portfolio value. So there'll be a couple different lines that we'll see as I calculate this, and I'll make sure to walk you through that. Okay, so I'm going to calculate. So age 18, starting with $300 a month from 18 until 65. Let's see what that gets you. Okay, so at age 65, right around that time, you'd have $1.2 million, okay? Your investment at 80 years old would be to basically 2.5 million, okay? So you can see, wow, you have made quite a good sizable amount of money during that time. So I'm looking at these different lines here. So this is, right here, this is showing you how much you're making over time in your actual investments. Okay, so it's just slowly and slowly going up. This is up to 80, stops at 80, okay? And then what this is down here, this blue line, this is how much you're actually investing, right? So by the time that you've hit 64, you've made about 1.2 million, okay? If you were just to have that money sitting in a checking account somewhere, you would have invested, or you would have, $169,000 saved. There's a massive difference between those two numbers. $1.2 million and, $169,000. That's a really, really big difference there, right? So this is a helpful graph to see. And you'll see that here, what's going to happen is your money is going to start to go down fast. If you haven't invested it and that's all you have saved up, you're not going to have enough money because of the cost of living. But if you have it invested, then your money continues to grow and grow and grow. Okay? You might have noticed this. You hit your FI number. If you scroll down, there's a lot of helpful information about that. But your FI number is basically your financial independence number. So just making sure that you have enough money in retirement to continue to live, basically. Okay? Okay, so now I mentioned the importance of time earlier before, right? So let's just say for fun, okay, we're not starting at age 18, but we're starting at age, let's just say age 14, okay? Just for fun. You're a real go-getter at age 14, okay? So we're going to see a big difference here. So we're going from 1,280,000 from age 18 to age 14 to essentially $7 million. So just that 4 years gets you a whole lot more money. Okay, now I know some of you might be thinking, yeah, but that's not realistic, right? You're not going to start being able to put in $300 a month at age 14. Okay, I hear you. I totally get it. So let's look at this then. Let's go from age 18. Let's go back to this, right? So you have 1.2 million at age 18. Let's actually go up. Okay, let's say that, you know, you didn't start thinking about investing until you're 35 years old, and that's the amount of money that maybe you're starting with 2,000, okay, and you're putting in 300. So from 18 to 35, you're going from 1.2 million to $379,000. So you can see that importance of time, right? So I keep mentioning that, like investing early and investing often. And quick props to this guy right here, because he says that all the time. This is Jeremy. This is his calculator and website. I encourage you to check it out. There's a ton of great information and resources there. But you've got to invest early. You've got to invest often. Okay. Now, if we take a look at this retirement age, you know, let's just mess around with this. And that's what I encourage you to do too, is just go onto this website and just put in whatever numbers you want to put in. But let's say you want to retire at age 55. Okay. So I'm going to actually, let's come back here. We're going to do our same 18-year-old example, okay? Because that's what we've started with. So let's say you want to retire at 55. I want you to watch what happens here, okay? Because you want to retire young, so you have a ton of life left, right? So that drastically changes things, because at retirement you have $623,000 now, right? But what you'll start to notice is that this line here is going to start to go down and down and down. Now the reason why it's going down, you might be thinking of it already, is because of that annual cost of living, because you still have to pay money for things, right? So your money's going to go down and down and down. Now, right, not that you want to think about this, but it's like you don't know when your time will come where you might pass. So you might have enough money until the end of your life, but you don't exactly know. So you want to be, you know, safer. You want to invest more if possible. So in that case, probably not doable. Let's change that to 60. Okay, now it's trending upward. Now it's looking, ooh, that's looking a little bit safer, right? Now, also for sake of discussion, because I know some of you might be wondering this, okay, well, rate of return 7%. Didn't you mention earlier that it was historically 10% over the last 50 years? Yes, I did. So let's change it to that just to show you, okay, 1.2 to 3.5. That is a huge difference there. But again, you don't want to get your sights set on that, so don't go crazy with the 10%. But I also want to show you, you know, your monthly investment. So if you are able to put away even more, like let's say instead of 300 on average, remember, over time you're putting in 500 from 18 to 65. That goes from 1.2 million to 2.1 million. That's a really big difference. Bring it up to 1,000. You just see how much that continues to grow and grow and grow. And look at that investment at 80, $11 million, right? So this is what I've said to my students. So many people think you can only become a millionaire if you're a celebrity or some sort of rock star, or, you know, you're an actor or whatever, right? Or you have to be a surgeon, or, you know, all those things are great. But you don't have to do any of those things. You just have to, of course, have a career. You have to earn an income, and then you have to invest early and often. There's a concept called pay yourself first. And what that means is that whenever you're making your money that you're making, you're setting aside a certain percentage of that for savings or investment in this case. And the more often that you can do that, as much as you can do that, the more money that you'll have. Because, right, all you're doing, you're putting your money in, and then it's just growing. And the nice thing about index funds, as opposed to choosing individual stocks, not that there's anything wrong with that, but index funds, it takes a lot of the work out. It's like you just put your money in, you make sure that you're investing it into the specific index funds that you're wanting, and then it just grows and grows. So there are some other features here that I didn't quite go over with you, but feel free to come in and take a look. I covered all the main core concepts. I really encourage you to go in to personalfinanceclub.com/investment growth retirement calculator. Just plug in your own numbers and have some fun with it, but also really thinking about your future and this concept of time, because it's really important. And it's like I've told my students, it's not like, money is the root of all happiness, right? However, it doesn't hurt, right? If you feel like you're going into your adulthood and your retirement years and you're covered in terms of, your home, or, being able to travel, having enough food, all those things are covered, then, that provides you with a level of security that has a lot to do with mental health. So this is a really important conversation, and I hope that seeing this tool has been helpful for you. I don't know if I'll make, we'll see if this video is helpful for people. I can make more in the future. But if you have any questions or comments, feel free to leave them below. And thanks so much for tuning in, and I'll talk to you soon.